Pre-approval isn't just a formality, it's a critical part of ensuring a smooth, successful real estate transaction. In today's competitive market, buyers who are pre-approved demonstrate seriousness and financial readiness. As a real estate professional, your ability to guide clients through this process, without crossing into lending advice, is both a professional obligation and a legal responsibility. Why pre-approval matters in real estate. Defining pre-qualification versus pre-approval. Type pre-qualification, pre-approval, based on self-reported info, verified documentation, credit check, no yes documents required, none, W-2s, tax returns, bank statements, etc. Strength, basic estimate, verified and lender reviewed, use case. Early planning offer, submission and serious home shopping. Pre-qualification is a soft review, useful for exploring affordability. Pre-approval is a hard check that supports a real offer. Example: a buyer with a pre-qualification might estimate they can afford $500,000, but after pre-approval with documentation and credit review, they learn they qualify for only $425,000. Why sellers prefer pre-approved buyers. Reduces risk of transaction failure due to financing. Faster closings, since underwriting has already begun. Demonstrates buyer commitment, especially in multiple offer situations. Example: a seller receives 2 offers, one with a pre-qualification, one with a verified pre-approval letter from a local lender. Most listing agents will advise their seller to choose the pre-approved offer as it provides more certainty that the deal will close. Impact on negotiation and offer strength. A pre-approved buyer is more likely to be taken seriously. Buyers with strong letters can sometimes negotiate better terms or even beat higher offers that lack financial proof. In competitive markets, pre-approval is often required just to view a property. AAC R4 28 1101B. Real estate agents must deal fairly and honestly while protecting and promoting their clients' interests. Helping your buyer become pre-approved fulfills this duty by preparing them for success and ensuring sellers see them as qualified and serious. The agent's role in educating buyers. While agents are not mortgage professionals, they have an important role in setting expectations, offering support, and guiding buyers toward responsible lending practices. Explain the pre-approval process without overstepping. Outline what pre-approval is. A lender reviews income, credit, and assets. Emphasize the importance of doing it before making offers. Help clients understand that it is not a guaranteed loan, but a significant step toward securing one example script. Pre-approval shows sellers that you're financially ready to move forward. It involves submitting documents like pay stubs and tax returns so a lender can issue a letter with a specific loan amount. ARS, paragraph 32, 2153A, 3. This statute prohibits licensees from acting beyond the scope of their license, such as giving direct mortgage advice or suggesting loan products. Real estate professionals should always defer to the lender when technical financial questions arise. Refer to qualified lending professionals. Maintain a list of reputable, licensed lenders or mortgage brokers. Give buyers at least 3 options to avoid steering. Avoid any exclusive arrangements or undisclosed relationships. RESPA compliance, Real Estate Settlement Procedures Act. It is illegal to accept kickbacks, referral fees, or anything of value in exchange for referring a lender. All referrals must be without expectation of compensation. Help clients prepare documentation. Agents can guide buyers in gathering documents they will need for pre-approval. 2 years of W-2s or tax returns. Pay stubs from the last 30 days. Bank statements. Photo ID. List of monthly debts. Example: an agent sends a pre-approval prep checklist to a new buyer that includes a list of required documents and trusted lender referrals. The buyer is now informed, organized, and more likely to succeed during the application process. How to support buyer readiness. without overstepping. As a real estate licensee, you must stay within your professional boundaries, support the process, but leave the lending to the lenders. Provide resources, not advice. Share financing checklists. Recommend early lender consultations. Clarify your role. I'm not a lender, but here's how to get started. Help set expectations. Discuss realistic home price ranges based on estimated pre-approval. Clarify the impact of credit scores and DTI on loan eligibility. Suggest addressing credit challenges or saving more if needed by working with a lender. Recommend early lender contact. Waiting until after a home is found to begin pre-approval often leads to delays or lost opportunities. Encourage your buyers to get pre-approved before home shopping. Update their letter for each offer. Respond quickly to lender document requests during escrow. Avoid RESPA violations. Don't offer lender referrals as a helpful resource. Accept money or gifts for referrals. Recommend early financial planning. Recommend specific loan types or rates. Document lender conversations in writing. Suggest a buyer. Skip pre-approval to save time. Example of non-compliance. An agent receives a $100 gift card from a lender for every referral. This is a RESPA violation and may also constitute unprofessional conduct under ADRI guidelines. Pre-approval is the first step toward a solid contract. As a real estate professional, your job is to prepare, support, and guide, not to underwrite or approve loans. Pre-approval is a critical tool in helping your buyer. Be taken seriously in a competitive market. Avoid financing delays or denials. Secure better negotiating power. By understanding and respecting Arizona's laws and professional standards, you can provide exceptional service while staying compliant. Key statutes and standards. Recap, Reference Application, AAC, R4-28-1101B. Duty to protect and promote the interests of your client with honesty and fairness, AAC, R4-28-1101I. Obligation to exercise reasonable care in communicating material facts, ARS, paragraph 32-2153A, 3. Prohibits acting outside your license, such as giving loan advice. RESPA bans kickbacks or fees for lender referrals.